Most retirees believe that once their home is paid off, life becomes more stable. They expect fewer worries, lower stress, and predictable expenses. But what many do not realize is that one yearly bill can quietly change everything. Property taxes are no longer as simple or as stable as they once were. Across different states and cities, new rules are being passed, updated, or reinterpreted, and retirees are often the last to hear about them. These changes do not arrive with warning letters or loud announcements. They show up as higher bills, lost exemptions, or confusing notices that are easy to ignore until it is too late. For someone living on a fixed income, even a small increase can force hard choices. Some retirees are now paying more than expected just to stay in the homes they worked their whole lives to own. Others qualify for relief but never receive it because they did not know they had to apply. The most concerning part is that many people assume these rules do not apply to them. They trust that what worked last year will work again this year. That assumption is where problems begin. In today's video, we are breaking down the new property tax laws retirees need to understand right now. We will explain what is changing, how these rules may affect homeowners, and what every retiree should be paying attention to moving forward. Before we go any further, please like this video and subscribe to the channel, because staying informed today could help you protect your home and your retirement income tomorrow. To understand why these changes are so important, we first need to look at what property taxes actually are. Property taxes are yearly charges placed on homes and land by local governments. They are usually based on the assessed value of a property, not on a homeowner's income. These taxes help pay for things like schools, police, fire services, roads, and local public programs. Even if a house is fully paid off, property taxes never disappear. They continue as long as someone owns the home. For working families, these costs are often covered by regular paychecks. For retirees, the situation is different. Once steady income stops, property taxes must be paid using savings, pensions, or fixed monthly benefits. This is where the pressure begins. When home values rise, tax bills often rise with them, even if a retiree's income stays the same. That means a person can owe more money each year without earning anything extra. This is why property taxes matter so much in retirement planning. They are not optional, they are not flexible, and they can quietly grow into one of the largest expenses retirees face. Understanding this foundation makes it easier to see why recent law changes have such a powerful impact. Now that we understand why property taxes matter so much in retirement, let's look at how federal tax law changes come into play. While property taxes are set locally, federal rules can influence how much of those taxes affect your overall finances. One key area involves deductions tied to state and local taxes, which may include property taxes. When these limits change, it can alter how much retirees owe at the federal level. For some homeowners, updated deduction rules may reduce taxable income, offering a bit of relief during tax season. For others, especially those who do not itemize deductions, these changes may not provide the same benefit. Federal tax updates can also affect how retirement income is taxed, which indirectly shapes how manageable property tax bills feel each year. Another important point is that federal laws often change over time. Some provisions are temporary, while others depend on income level or filing status. This creates confusion for retirees who assume tax rules remain the same from year to year. The main takeaway is simple. Federal tax laws may not change your local property tax bill directly, but they can strongly affect how affordable that bill feels once everything is added together. That is why understanding these updates is essential for retirees trying to protect their income and avoid surprises. While federal rules shape the bigger picture, most property tax relief for retirees happens closer to home. Many states and local governments offer programs designed specifically to help older homeowners manage rising costs. One common option is a senior exemption. This reduces the taxable value of a home once the owner reaches a certain age, lowering the final tax bill. Another form of relief is a tax freeze. In these programs, property taxes are locked at a certain level, preventing increases even if home values go up. Some areas also provide tax credits or deferrals. Credits lower the amount owed, while deferrals allow payment to be delayed until the home is sold or transferred. These programs can provide meaningful help, but there is an important detail many retirees miss. Most relief options are not automatic. Homeowners usually must apply, meet eligibility rules, and renew their status on a regular schedule. Missing a deadline or failing to file paperwork can result in losing benefits without warning. That is why it is essential for retirees to check with their local tax office or assessor each year. Knowing what help exists and how to qualify can make a significant difference in keeping housing costs manageable during retirement. As important as current relief programs are, it's also critical to watch what may be coming next. Across the country, lawmakers are discussing new ideas that could reshape property taxes for older homeowners in the future. Some proposals aim to limit annual increases for retirees once they reach a certain age. These limits could help protect people on fixed incomes from large spikes in tax bills. Other plans would expand existing exemptions or create new credits specifically for senior homeowners. If passed, these measures could reduce the overall tax burden for many retirees. In a few states, debates are underway about how to treat rising home values so that longtime owners are not penalized simply because their property became more valuable. However, not all proposals are guaranteed to become law. Some may be voted down, others may change significantly during the legislative process. That said, paying attention to these discussions is important. Knowing what might change gives homeowners time to prepare, adjust plans, or even consider where they want to live in retirement. Staying informed about potential updates can help retirees make smarter choices in the years ahead. Knowing about these changes is important, but awareness alone is not enough. Retirees need to take a few clear steps to protect themselves before problems appear. The first step is to review your current property tax statement carefully. Look for changes in assessed value, exemptions, or credits compared to previous years. If something looks unfamiliar, do not ignore it. Small differences can turn into larger costs over time. Next, contact your local tax office or assessor. Ask which programs are available for older homeowners and what the eligibility rules are. Many retirees qualify for assistance, but never receive it simply because they did not apply. Another important step is to track deadlines. Some relief programs require yearly renewal, and missing a single date can cancel benefits without notice. It is also helpful to keep copies of important documents, including proof of age, residency, and income if required. For those who feel unsure, speaking with a tax professional or local advisor can provide clarity. They can help explain options without making changes on your behalf. Taking these actions early gives retirees more control and reduces the risk of unexpected financial strain later. Preparation is not about fear. It is about staying informed and protecting the home you worked hard to build. Property tax rules may seem quiet and technical, but their impact on retirement is very real. For many retirees, these laws can decide whether staying in a home feels comfortable or financially stressful. We have seen how taxes work, what changes are happening, where relief may exist, and why paying attention now matters more than ever. The most important takeaway is this: staying informed gives you power. Understanding your options, checking your eligibility, and acting early can help protect both your income and your peace of mind. Retirement should be a time of stability, not constant financial surprises. If this video helped you understand property taxes more clearly, please like the video and subscribe to the channel so you do not miss future updates that could affect your retirement. Thank you for watching, and take care of the home and future you worked so hard to build.